Hello everyone, welcome to the IchimokuCharts.com daily analysis for the S&P 500 for Tuesday, June the 21st, 2011. Well, a continuation of the trend to the upside today, and we've had a very large green-bodied candle. A candle that's made a higher high and a higher low, thus continuing the trend in the first time frame. As we can see, the previous 3 days we've had the market trending up, making higher highs and higher lows, and we can see that we had green body candles. And for each successive day, the size of the bodies of those candles has increased. And the body of the candle, when it's green, represents the buyers making net bullish progress on the day between the open and the close. And this is exactly how you like to see a trend develop, with the size of those bodies gradually increasing. Now, what tends to happen is that quite often when we have a very large increase in the size of the body, it can be a period of exhaustion of the power of the bulls. So we do need to be aware that we've had a very large bullish day today with a lot of upside momentum for the bulls. We are now interacting with a very strong area of resistance, and we highlighted this region where we saw the shadows on the top of these candles around 1287 extending up to about 1300 as an area where this market could find strong resistance. So there is a very good possibility that the market may take a rest. Now, having said that, however, the bulls are still in control of this market. For the trading day, they did close up towards the high, and they did show very strong commitment to taking this market higher. So what we need to do at the moment is look for evidence of some selling coming in. So when the market opens the next trading day, the high of the current candle is very important for this market for any potential continuation of the trend to the upside. Obviously, the 1300 round number area will be a very important area for this market to test. If we do see a red-bodied candle in the next day's trading, then the market could trade off and perhaps test back down to 1275. If we look at the bigger picture, we are still in a second time frame downtrend, and we can see a series of lower peaks and lower troughs, and here the market is rallying, and we may form another intermediate lower trough, so we do need to be aware of that. Significant thing, however, is that we have taken out some of these minor swing highs or peaks. That is quite significant for the market to take all of those out in such a very short amount of time. It does highlight the amount of upside momentum that we've seen in this market over the past few trading days. And it has been quite some time since we saw that type of momentum in the short term for the bulls. The previous time was roughly here, very similar looking candles, and then we had the big sell-off, and that was as the market was interacting with resistance around 1344. So we could see that same scenario again. We do need to be aware of that. Now, in Ichimoku charts terms, the market remains negative in big picture terms because we're trading below the cloud. We are bearish in the medium-term time frame. We're trading below the Kijun-sen, the pink line. That is pointing down, reflecting downside momentum in the market in the medium-term time frame. And we are now trading up above the Tenkan-sen, the green line, which means that we're bullish in the fast-term time frame, and that indicator is turning up. And that does indicate the good solid upside momentum that we have in this market. Now, if the market does take out the 1300 level, then we could see resistance just above there at 1302 at the Kijun-sen, and then certainly at the cloud. So there is very, very strong resistance overhead, and the market will need a great deal of upside momentum for it to turn bullish in big picture terms, because we would need to trade through the cloud. So a lot of overhead resistance, but certainly for tomorrow, the round number 1300 is all important for this market.